very interesting. We have had a bunch of stock market plunges during this primary election campaign season. Take a look at this. The day after Iowa, the stocks fell 2.5%. The day after South Carolina, stocks fell almost 2%. The day of the Michigan primary, stocks down 2.5%. And the day of the Super Tuesday mega primaries, that is this evening, stocks down almost 3%. All right, let me go to Don Luskin. What is this all about? Is this stock market plunge, and we've had a bunch of them, and they are coinciding with these elections, does this have to do with market fears over the politics, over the elections, over a possible turn away from business and capital formation, or is this part of a cyclical slowdown that some say will be in a recession? John Luskin, what do you make of this?
Well, I think it's very clear. I think the market going down on all these election days means that the market is just a little bit sick and tired of this whole democracy and voting thing. You know, it's out of control. And
how can you be against democracy? Even you cannot be against democracy.
I'll tell you this, if our democracy elects Hillary Clinton president, I'm going to be against democracy. And we got a chance of that happening. Larry, I want to just tell you one thing. You know, I've thought a lot about some of the things you said the last time I was on the show a couple days ago. You were drawing some very interesting contrasts between the economics of Barack Obama and the economics of Hillary Clinton. And I just want to say that I've thought about it, and I think you're right. I think Obama is a much less anti-growth candidate. I think it's actually good news for markets that he's pulling ahead. By the way, on Intrade, he is now 57% to get the nomination.
You've changed your view on Obama. You have changed your view. You're coming around to the Kudlow view with the Volcker nomination. And actually, Obama has said, look, he was against Hillary's price controls on mortgage interest rates. That is huge. He's also against garnishing wages. He's also against a health care insurance mandate that would stifle us. I noticed Senator Clinton got sick today. Rumor is she couldn't see a doctor for 7 months because of the long lines.
Well, I guess there are some advantages. But, you know, I'm not... It's a tough choice between Obama and Hillary. I don't like either of them, but I think it's a useful distinction. And I think the market of democracy, it looks like it's slowly turning around and rejecting the strident, statist, social democrat line of Hillary Clinton, where anytime there's some problem, she just opens her mouth with some big government intervention. Oh, we're just going to come in and freeze mortgages, no problem. You know, that's just not the way to handle an economy where you just lurch from directive to directive.
All right. Don Luskin, both Ben Stein and Andy Bush have said that today's sell-off and the weakness year-to-date during the primary season is organic to the stock market for a variety of reasons. Do you agree with them, or do you see a political influence in this game?
I think it's a combination. I think you have to just be honest and realize this is not going to be a simple story with just one headline. We've obviously got credit crisis problems, but on the other hand, we've got a super easy Fed. We've got recession risks, but on the other hand, things are really cheap. So it's good news, it's bad news. But look, Larry, let's face it. Chances are darn good that we're going to have a Democratic president and that the 2001 and 2003 tax cuts are going to roll off in 2010, if not before. That is a sad reality, and that has a present value. And while all kinds of good things could happen, the credit crisis could solve itself, as I think it will. The recession fears could go away, as I think they will. But every day that goes by, we get closer and closer to that date with destiny when taxes go up unless somebody steps in and stops them from going up. And a Democratic Congress isn't going to stop that, even if John McCain is president.
Ben Stein,
so we got a real issue here.
Don Luskin, what the heck is an investor to do? You have the election uncertainties. We can speculate till we're blue in the face about what Obama would do, what John McCain will do. But as a matter of practical reality, we got to go to work tomorrow. People are buying and selling, Don. What is your recommendation?
I have to tell you, when I saw that ISM number this morning, I was thinking about just going to work tomorrow and just sort of the ordinary living of one's life, one day at a time, one step at a time. And that number just simply doesn't reflect reality on the ground. I don't know any phenomenon out there in the real world that you and I live in, that anybody listening to the show lives in, that reflects that kind of recession cum depression in the United States. It's simply wrong. It will be reversed next month. Remember, the last time we saw a number that low, it marked the very end of the last recession, not the very beginning of the recession. That ISM number is as much a sentiment indicator as it is a data number. It tracks consumer sentiment more than it tracks actual data. I really think you have to see it as a contrary opinion thing as a buying opportunity. We put in a good bottom on January 22nd. I think you have to close your eyes, hold your nose, and buy stocks here. Larry, may I make an interjection? I'd like to comment on something that has been said a number of times by guests on this show who style themselves as perma-bears but are in fact really anti-America bears. They say, oh, well, the U.S. is going into recession, but the rest of the world is just fine. So you've just got to get out of everything in the U.S. and buy Asia, buy Europe, buy China. You know the story. Well, during this very difficult January and February in the U.S. stock market, the U.S. has been the best performing market in the world. The rest of the markets have just gotten killed. So all those anti-American perma-bears gave your listeners exactly the wrong advice.